This is Fintech Insider News. This week, Elon Musk's X announces a partnership with Visa to bring X money to life. TravelPerk is making a foray into fintech. And everyone is talking about DeepSeek. But what does it mean for financial services? We'll be discussing all of this and more on today's show.
Do you know the problem with keeping all your eggs in one basket? One slip, and they all come crashing down. And the same applies for where you keep your money. But don't worry, Insignis Cash lets you spread your savings across leading banks, maximizing security, flexibility, and returns. No more sleepless nights, no more smashed eggs. So get cash clever with Insignis. Visit insigniscash.com now to learn more and get started today. That URL again is insigniscash.com.
Hey there, Fintech Insiders. We interrupt your usual podcast listening to ask a teeny tiny favour. 11FS is in the running for Consultancy of the Year at the 2025 British Bank Awards, and a 5-star vote from you would absolutely mean the world to us. It has been a busy year at 11FS. Not only have we brought you over 120 episodes of Fintech Insider, our ventures team have also been very busy working with global brands to change the fabric of financial services, whether that's designing new digital wealth propositions to helping credit unions all over the world serve younger people better. And that really is only scratching the surface on the great work that the teams have been doing. If you want to help us out, head to 11fs.com/vote or click the link in the episode description to vote for 11FS and help us bring home that trophy.
Hello and welcome to episode 933 of Fintech Insider. I'm Benjamin Ensor, Director of Research and Strategy at 11FS. On this week's news episode, I'm once again joined by a fantastic panel of industry experts to get their insights on the biggest stories across financial services and fintech. First of all, we have a Fintech Insider debut for Rory O'Neill, Chief Marketing Officer of Checkout.com. Welcome to the podcast, Rory. Can you tell our listeners a little bit about you and a little bit about Checkout.com, please?
Benjamin, thanks for having me. Delighted to be here. Delighted to join Vivek and Nico on this call. Rory O'Neill, I've been with Checkout roughly 18 months or so. Chief Marketing Officer, thrilled to be at Checkout. Checkout's a digital payments provider operating globally. And we're just trying to help more and more merchants take payments as they process online.
Well, welcome. And we have another Fintech Insider debut from the award-winning Multiply, which is Vivek Madlani, Chief Executive and co-founder of Multiply. Welcome, Vivek. Can you tell us, or those of our listeners who are not familiar with Multiply, a little bit about you and a little bit about what Multiply does, please?
Sure thing. Again, very much delighted to be joining you here today, and Nicolas and Rory as well. As you mentioned, I'm the CEO and co-founder of Multiply, founded the company 9 years ago now. And we help firms launch scalable advice offerings into the market. And our advice covers a whole host of different financial planning areas, everything from saving up an emergency fund, home buying, investing, retirement, and protection as well.
Fantastic. Thank you. Welcome. And it's also a warm welcome back to the podcast for Nicolas Benady, Chief Executive of Swan. It's really great to have you back on the podcast. As we're recording this, the news broke of your new fundraise, so congratulations. For those of our listeners who've not come across you, could you tell them a little bit about what Swan does, please?
Yes, of course. So first, thanks for having me again. Yes, it's a very good day for us to be on the show today because we've announced today that we've raised a new round of 42 million euros. So what do we do at Swan? Swan, we're a banking as a service platform. So we enable any companies, but especially financial management softwares like accounting platforms, treasury, expense management platforms. So we enable them to provide banking services to their own clients. And so we enable embedded finance, and we are focused on the European Union market as of today, but we can't wait to come to the UK one day or another.
now that we're no longer part of the European Union. Indeed. Well, welcome to the show. So we have a panel, and let's move on to the news. So our top story this week is that X announces a partnership with Visa to power X Money's wallet. So the social media platform, formerly known as Twitter, has announced a partnership with Visa to power its upcoming financial services product, X Money, using Visa Direct for real-time transfers, wallet loading, and bank connections. Chief Executive Linda Yaccarino teased this as the first of many big announcements for X Money coming this year. This is the first step on Elon Musk's vision of transforming X into a financial platform. Since Musk's controversial takeover in 2022, X has been obtaining money transmitter licenses in around 40 American states. App researchers have already uncovered potential upcoming X Money features such as user-to-user payments and wallet functions. Rory, it feels like I should come to you first as the payments expert and marketer. How do we feel about the sort of incoming X Money? How do you think the market's going to react to that, or consumers are going to react to that?
Well, I guess, Benjamin, the first thing is, what does it tell us that, one of the pioneers of electric vehicles and certainly a man who's on a mission to put us all on Mars, invest in a similar thing in payments. It tells you there's a huge opportunity in payments, I think, first of all. But, we would say that. I think that, payments as the lifeblood of any organization that's trying to, effectively, take a payment at the moment of sale. If you can take a payment, you can generate revenue. If you can generate revenue, you can generate profit. And if you can generate profit, you can generate cash. So the criticality of payments, I think, is evident there. And I think, what we're seeing is a huge growth in digital payments, of course. Digital is taking over. Every single payment experience we have anywhere in the world in any commerce is digitally driven. We've seen huge growth in digital wallets, around the world, obviously starting probably first in China, where more than 90% of all payments are at least, digitally enabled. In the Western world, 50% of online payments are now digital wallets. 30% of in-person payments are now digital wallets. So, you're going to see this grow and grow and grow as digital transactions and the digital economy grows. So I think it's a super smart move. I think you're going to see it, sort of grow. And of course, it taps into a great program and a great product from Visa, which is Visa Direct, which helps companies, particularly gig economy workers, actually receive payments a lot faster. So I think it makes a ton of sense, Benjamin.
You almost wonder why Twitter didn't do it before, particularly when it was under sort of Jack Dorsey and so on. It seems almost the question is, why didn't X or Twitter do this sooner? Do you think that's fair? Is X almost late to the party here?
Well, I think I don't think you have a super app if you don't have payments. First and foremost, I think if you see the predominance of Alipay and of course WeChat with WeChat Pay, it's hard to have a super app with payments. I think that we in the West, we've been more conditioned by the way that Apple and Google run their app stores, and we kind of run point-to-point or best-of-breed apps for various pieces. So maybe there's a little bit of consumer trends and consumer dynamics there around it in the Western world. But look, I think that, whether they're too late or not, I think they clearly have millions of people using the platform. And you're going to see more and more embedded, immersive payment experiences where consumers are actually using platforms. So it makes a ton of sense to me.
Nicolas, what do you think? Embedded finance, this isn't going to catch on, is it?
So you could. This is typically the kind of thing that we could empower. So we could help this kind of social network. So probably not X.com, but other people to do this kind of thing. But I don't think it makes any sense here. So it's quite funny because I started to learn about payment and the finance industry and banking, everything. It was 15 years ago. And so for that, I read a book, and it was The PayPal Wars. The funny thing is, if you read this book, you will. It talks a lot about Elon Musk, because PayPal was merged with another company like at the beginning of the years 2000, and with a company that did at the time wallet and peer-to-peer payment. And this company was called X.com and was run by Elon Musk. Mm-hmm. And it was 25 years ago. And this company was successful at the end of the day, because they were acquired by PayPal, and PayPal is a huge success, of course. But now it's late. It's way too late to do it again. Probably Elon Musk has that in mind, that I don't know, he probably didn't like the way people evolved or something like that. But to succeed for this kind of wallet, you must be. What needs to be done is so huge today. So even 25 years ago, it was hard. But now today, you must be accepted at every merchant. You must. Every social network already tried to do it. Facebook tried to do it. It didn't work. So I don't believe this will work. But well, let's see. Elon Musk sometimes makes things that nobody thinks it's possible. So why not? Why not? Why not Back to the Future? Why not redoing it again?
I mean, why not? He's a very powerful and influential man. Vivek, what do you think? Do you agree with Nicolas that X is late? There's a lot of competition already, particularly in the American market. Or do you think actually every self-respecting social media platform needs to become a social commerce platform and needs payments in there? And this is absolutely the right thing to do. Where are you on this, Vivek?
Well, I agree with Nicolas that it does feel as though there's an element of unfinished business maybe, and maybe he wants to take X to where he originally wanted X to go. And clearly Elon fancies a challenge, right? In whichever area he applies himself to. So it feels as though he likes challenging himself and going after tough problems to solve. Wherever it may be. I think there is perhaps some upside to removing friction in payments in some of these platforms. I think a lot has been done to remove friction to date, but I still think there is some more that could potentially be done. And I think the other thing, I think this kind of almost builds on a bit, which is something we think a lot about in the advice space, is around trust. I think there is something that Elon has. I think there's this narrative arc, or there's this element of Elon wanting to try and build trust back into certain X accounts, that kind of thing. And I think once the trust is there, perhaps what can follow, or what certain X users may be more comfortable or reassured with, is then moving on to payments on the platform. So I think there is something there that potentially he's building on.
It's a really interesting point about trust. I was going to come on to that. Right? Rory, what do you think customers are likely to trust X money? So leaving aside, why X is doing this, how do you think X users will respond? Do you think they'll be excited by this? Do you think it depends on other things? What do you think consumers are going to respond to?
A great question. Look, I think we can debate on whether late is later or it's just too late. But I think the important thing is you better have those services at some point, particularly if you're going to try and get to be a super app status. I think the really interesting thing is, if you look around the world at research we've done at Checkout, is that in China and Asia Pacific, the point of social commerce and payments is completely collapsing. Social media and social platforms are not just about discovery and marketing, they're about payment and fulfillment too. In the Western world, we're still a bit more about discovery, but particularly if you research the Gen Zs and people that are using social media platforms much more robustly than others, they're expecting payments. So again, I think there isn't a social media platform that doesn't need to become a social commerce platform. And if you're going to be a social commerce platform, you're going to have payments. And that's generally what our research says.
So really, this is just foundational. You didn't actually answer my question of whether people will trust it or not, but let's throw that one to Nicolas and see if Nicolas has a view. Do you think X will be able to build trust?
Yeah, I think X is totally able to build trust for, even if maybe not for the whole population in the world, because, X has his reputation, but many people will trust X. It's a big company. It's run by Elon Musk. So definitely, I don't have any doubt of it. So trust, as Vivek and Rory said, is a fundamental pillar if you want to launch a payment service. But it's not the only one. This is what I was saying. You need to drive usage, and this is where I don't today understand how such a service could succeed. But again, for trust, Benjamin, I'm with you. I think X can make it.
Rory, let's come back to you on this sort of thought about super app, because you've drawn the parallel with sort of Asia and so on, and clearly, as you say, the social commerce apps in Asia, payment apps, and everything else, and presumably that is indeed Elon Musk's vision. What else do you think he and his team are going to need to build at X to sort of get that? Because payments isn't enough, right?
No, I don't think it is enough at all. I think it's a fundamental pillar. I think I go back to obviously Uber, one of the apps that's on the super app journey, perhaps, Benjamin. I mean, Uber obviously started as a ride hailing app in the west coast of the US, and if I recollect rightly, Uber's latest advertising campaign is for people who like to eat and go places, which sounds like an awful lot of people in that sort of sense. So again, I think you got to go right into the epicenter of all things that are digital economy. You've got to go into commerce, you've got to go deep into travel, and of course all those commerce industries are underpinned by payments, right? Like in that sort of sense. So we've looked at various research actually conducted with the Financial Times here in the UK, and we've looked at like how enterprise merchants are thinking about super apps, and broadly speaking, 34% of enterprise merchants we spoke to say that the lines are blurring between commerce and fintech and financial services. They see them as blurring into one experience. And unsurprisingly, 82% of e-commerce businesses in the US who were branching out into offering financial services are saying they're doing so with the ambition of being a super app. So I don't know if it's necessarily that unique, Benjamin, but I think there's a lot of people trying to do this for sure. And many of the elements that the panel's talked about already, trust, community, scale, engagement, lots of different services, all underpinned by the ability to take a very effective, secure payment, is going to be what it's, what are fundamentals. I think that maybe, consumer delight and the consumer offering is the bit that's going to tip the interest, right? Like making things super easy that people are actually genuinely interested in using. That might be the differentiator for a super app, I'd say.
Agreed. All right. Let's move on to our next story, because I'm sure we're going to be hearing plenty more about Elon Musk over the next few months. Okay, so our next story is a roundup of a couple of big stories concerning AI in financial services, one big, one small. So firstly, a shocking Chinese AI advancement called DeepSeek is sending American stocks plummeting, according to CNN and other sources. Meanwhile, NatWest Group in the UK has invested in Serene, an AI platform tackling financial vulnerability. So in case you've been living under a rock, you've been away from your podcasts, you might have heard or seen that there's been a major shake-up in AI and tech over the past week as Chinese startup DeepSeek unveiled a powerful ChatGPT-style AI model that operates at a fraction of the cost of the American giants such as OpenAI, Google, and Meta. The news triggered a massive stock market sell-off, with Nvidia losing nearly $600 billion in value, marking the biggest single-day market loss in history, which is pretty astonishing. Meanwhile, in slightly smaller news, NatWest Group has made a strategic investment in Serene, an AI platform focused on tackling financial vulnerability using real-time insights and behavioral science. The platform aims to detect early signs of financial distress and predict risks, enabling banks to provide more personalized, timely support at scale. So, two quite different stories from different ends of the sort of AI spectrum, but there's elements in common. Vivek, let's start with you on this story about NatWest using AI to support vulnerable customers, because AI is an incredibly powerful tool, can be used for good, can be used for evil. This seems like a really good potential use of AI. What do you make of this at Multiply?
Yeah, I mean, this definitely feels like a kind of fintech for good application. We're very familiar with the topic of vulnerable customers, and it's a big area of focus for the FCA, rightfully so. What I found and to be honest, the area of vulnerable customers in terms of a focus area for fintechs is I don't think there's anything particularly new there. I mean, I've come across firms for a number of years now who have been very focused on certainly the detection side. We're helping firms detect areas or categories of vulnerability. I found what was interesting about this was more around the proactive prevention side of things. I think that is kind of perhaps a bit more of a new area for some of these kind of features or toolings or products to kind of go into. And where I find it particularly interesting is then taking perhaps the detection side of things and then combining that with generative AI to then generate interventions, content, communication directly with those customers. So I think that's pretty interesting from my perspective. But yeah, I think it looks like a sensible move. I don't know, huge amounts of detail about the company and how it does what it does, but it certainly seems like a sensible move in terms of an area to apply AI, apply the latest technology that we're seeing come out, and apply that at scale.
Nicolas, what did you think of this story? Are you seeing banks or other financial services companies in France or elsewhere in the European Union trying to sort of look after more vulnerable customers? People are struggling. What do you make of trying to use AI to try and spot the customers who are in difficult financial situations or at risk?
Yeah, of course. So first, there are so many problems that AI can solve in fintech. So we're probably the industry that will be the most disrupted by AI. And so for so many topics, and this one is one of them. And for sure, one of the biggest issue we have today in our industry is fraud. So how to protect vulnerable people not to be frauded. And so it's the funny thing is that more and more we see that AI is used to fraud people. And so what we are talking about now is AI will be used to protect people to be against other AI agents. So what is our world today? But no, of course, it makes a ton of sense to use AI to I don't know, even, we could imagine like robots training. I would love my parents to be trained by a daily WhatsApp message, reminding them not to do stupid stuff with their bank account. There are so many things to do to protect people.
Rory, I'm tempted to ask you whether you have relatives that you want to have reminders about not doing stupid stuff. But maybe I should ask you a more serious question about, what's your view on sort of AI here, either helping protect vulnerable customers or sort of protecting all of us against fraud?
Well, thank you for not asking me if I wanted to replace my relatives with an AI agent. I appreciate that greatly. I think Nico's dead right here. I think one of the biggest challenges in financial services is fraud, and AI is already being used in many, many great places to reduce fraud. I mean, particularly in our world of digital payments, one of our biggest challenges is that processing digital payments has inherently more risk and more fraud than processing in-person payments. When you put a card in a machine, 90+% time it'll work. If you put the same card in an online browser or an app, that can drop as low as 80%, which is a big revenue problem for many merchants that exist in the digital world. So we've seen great deployments of AI, machine learning across our payment networks. We're running 60 million optimizations a day to make sure the payment transactions go through and they go through at minimum levels of fraud. So I think that is going to be continued to be a huge investment area for many great innovators to help the financial services industry. And I think the second place, maybe Benjamin, if I could, I think the other place we might see a lot of AI usage in our industry is to help with the word service. And good on that steer for using AI to target particular segments where you generally need a different level of service. And I think you've got two great applications of AI here, right? One on the fraud side and one on the service side. So, good for them.
Yeah, indeed. I think we should definitely applaud NatWest for what they're trying to do. Let's move on to the DeepSeek story. Vivek, I'm going to come to you first again. I mean, this seems like a staggering thing. I mean, yes, there's a political element to it. Yes, it was announced on the day Trump was inaugurated, and so there was clearly an element of sort of China trying to sort of steal a little bit of Trump's thunder. But parking the sort of political dimension, should companies in the West now be thinking, oh, wow, the rate at which China has developed AI suggests that AI is moving even faster than we thought. I mean, how big is this, do you think?
Oh, it's huge. And you can see from the community just the kind of shockwaves it seems to be making. But I think, my kind of techno optimist view on this is that it is positive, ultimately positive for, the likes of us, firms, working with AI, using these models, but more importantly, consumers. I feel like this is the sort of thing that will ultimately reduce the cost, increase the effectiveness of the models that are available, and mean that there are far more use cases within which we can apply intelligence. And as a consequence, the kind of the AI that we can integrate into our products and can reach many more use cases and many more people and benefit more people. And I think there's a lot of smart stuff going on in terms of what DeepSeek are doing, their approach. Hats off to them for making a lot of that open and explaining how their approach is and how they've achieved what they've managed to achieve. And I think there'll be more of this. I think, it'll be interesting to see what India are cooking up beyond, China and other countries. There's just more and more smart individuals applying themselves to building better and better models, and applying themselves on like different methods to do so. And I think there's a underlying story here around, the kind of constraints of capital, the constraints of resources, where a firm has limited budgets, limited access to the latest chips, what they're able to achieve.
Nico, do you share Vivek's sort of optimism that this is fundamentally a really good thing, and it's just going to open up more opportunities?
Yes, I think it's a very, very good thing for the tech industry all over the world, because I'm not super keen of seeing a world where all the power is in the United States. So what does it? Well, I'm not maybe keen. I don't want to choose between China and the US either. The good news is it's doable. And so maybe it should be also a wake-up call for Europe, because Europe and UK, we can probably do it as well. But I don't think it's a big revolution for the financial industry, because we're talking about cost. And actually, maybe the OpenAI or all the existing AI platforms are quite expensive, but it's so cheap compared to the technology we have today, that today we need first to fill the gap, to change all the services we do, either with traditional algorithm or operators, to AI. And we will make a ton of economy improvements with that. And then we have to improve the cost of AI by itself. So today, it's not relevant for FIs like us, but for the tech industry and for the world, it's massive news.
And Benjamin, can I just applaud and amplify what Nico just said there? I think one of the rallying cries here is, I don't think any nation has a claim on 100% innovation. I think it's great for consumers. Last time I checked, that there is global competition, particularly in such a exciting and interesting market. And I think that, I think we should dedicate a entire 11FS, episode to celebrating UK and European AI companies that are doing brilliant things and can do, help us tell that story worldwide. We don't want to miss this in the many ways that we miss data in the cloud, right? Like in that sort of sense. So let's have some European and UK innovators sharing their stories here and helping us all do great things for consumers, because competition in this space is generally going to be a good thing.
Indeed. Like multiply. But yes, we should indeed have more AI. I love the point you're making, the wake-up call for Europe, I think perhaps in particular. Okay, well, on that note, we're just going to take a quick pause here, and we will be back very shortly.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alika Bank, who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Imagine what's possible when learning doesn't get in the way of life. At Capella University, our game-changing FlexPath learning format lets you set your own deadlines so you can learn at a time and pace that works for you. It's an education you can tailor to your schedule. That means you don't have to put your life on hold to pursue your professional goals. Instead, enjoy learning your way and earn your degree without missing a beat. A different future is closer than you think with Capella University. Learn more at capella.edu.
Welcome back. Before we return to the news, we wanted to tell you about something we've been cooking up here at 11FS. Our 11FS Pulse report has landed. Now in its fourth year, the 2025 annual report gives you and your product team a comprehensive view of the state of user experience across financial services. The team has put such good work into this year's edition. I highly recommend that you give it a read when you get a moment. You can download your copy right now at 11fs.com/report. Right, back to the news. So our next story is that SoftBank-backed TravelPerk has doubled its valuation to $2.7 billion and plans a fintech push. So corporate travel platform TravelPerk has raised $200 million from investors, including Atomico and EQT, in a funding round, valuing the firm at $2.7 billion. The fresh financing doubles TravelPerk's market value from January 2024, when it raised $104 million on a $1.4 billion valuation. TravelPerk also said that it had acquired Yokoi, a Swiss spend management platform, a deal that will see it expand its reach into financial services. TravelPerk said the fresh cash will be used to accelerate growth, fuel expansion into the American market, and investment in product, tech, and artificial intelligence. Nico, it feels logical to sort of come to you first, because this is very much a sort of embedded finance story here. Here's a big travel company getting into financial services. Is this exciting? Do you think the valuation is justified? What did you make of this?
So, Benjamin, first, this is exactly that. This is totally about embedded finance. Because TravelPerk, before acquiring Yokoi, what was it? It was a platform where you could, of course, choose your flight, your hotel, whatever. But at the end of the day, you had to pay with your card, or you could choose an expense management platform to pay. Like you could plug Yokoi, you could plug Plio, Spendesk, this kind of services. And at the end of the day, TravelPerk sent the invoice to this expense management platform. But so before, TravelPerk was already super successful company, but it was a little bit like if Uber was just connecting driver and riders without processing the payments. So it would have worked and it would have been a great company. But Uber makes a ton of money and makes the life easier of both drivers and riders because they process the payment at the same time, because they make the payments. And that's exactly what TravelPerk understood. And by adding the payment, by owning the payment themselves, they will make more money at the end of the day. And acquiring this company was totally the right move, because it was not only about we tried to sell Swan services to TravelPerk for quite a long time, and we failed because they needed more than just a card and APIs and everything. They needed a full expense management software, and that's why they acquired Yokoi. And I think it's a very, very nice move they've done. So congrats to them. Regarding the valuation, really, I won't comment on that, because it's when you are at this type of valuation, it's not the valuation is not done by the strategic move, but just by the numbers, and that's normal. We are not in 21 anymore.
Rory, I imagine you completely disagree with Nico's theory that payments are the foundation of everything in commerce.
You'll be surprised to know that Nico is absolutely right about that statement, Benjamin. But look, I think it's look. First of all, I think look, let's celebrate travel. We were all restricted from travel for a period of time in our lives, and let's celebrate travel. Travel, as one of the common metaphors go, is probably the only thing that you buy that actually makes you richer. So let's celebrate travel and the fact that we can do it, and it's a huge part of the physical economy. It's a huge part of the digital economy. I think that the travel sector overall is typically. I find it fascinating what Nico was going through there. Is like typically what businesses have done is they've looked at the core software first and their core experience first, and then they eventually will get to payments. And I think that that's still, unfortunately, too much in the thinking, because payments is a difficult part. It's an essential part, obviously, but people sort of shy away from it and do the kind of like upstream journeys first and fix the consumer journeys in this piece first, and then they get to payment second. I think what we're seeing with the growth of embedded payments and embedded finance is that people are actually starting to look at the end-to-end flows, and they're realizing that they can improve way more things. And the example of Uber, I think Nico gave you, is spot on. Like, I mean, we don't even realize that we're paying an Uber. We get out, we close the door, and we get an email to say how much we've paid. And there'll be more and more industries that realize that entire journey is what we have to get through. And it's, congratulations to them for doing so.
It's delightfully simple, isn't it, when the payments are embedded? Vivek, I'm sure you noticed the artificial intelligence angle in this, and I realize you do more than just artificial intelligence, but what do you see the opportunities here for AI? What do you think they might be thinking of using AI for?
Yeah, so I agree with what Nicolas and Rory were saying around almost like the bundling of payments into the rest of what TravelPerk are doing, just making sense, reducing friction, and just improving the customer experience end to end. I found in the kind of press releases, like reading through them, that they almost underplayed the degree to which they were looking to use AI. And I was really quite impressed, actually, that they managed to do quite a significant fundraise at a significant valuation without putting AI front and center. It felt to me they weren't putting AI front and center and almost underplaying it a bit more than perhaps if I was going out to market, I would do. Yeah, I'd probably make a bigger thing of that. But I think, I think there are so many opportunities where you could apply AI. They do talk a little bit around agentic stuff within there. I think there is a fundamental use case or UI whereby arranging all this travel ends up being far more of an agent, far more where you're getting, it almost feels like you're getting an individual or a concierge booking the travel for you, looking after it on your behalf. I think the other thing that stood out for me was it just felt like this was a great kind of resilience story. In some of the press releases I read, it sounded as though they were struggling a bit, understandably so, during COVID, given what happened to travel. And again, I'm very passionate about travel and fully agree with what Rory was saying about it, and celebrate the fact that we can go back to traveling a lot.
So Vivek and Rory, sorry to disagree with you just on that one, because I think the worst problem we have in this century is global warming, and we should not travel that much. And so I'm maybe a special CEO because I try to avoid flying, which is quite difficult when you try to build a European company. So of course I travel by train, by hotel, but yeah, I think we could have such a wonderful life without traveling so much. But that's really apart from the conversation. So sorry for that.
So you're definitely not going to be using TravelPerk then too much, or maybe to book trains and stuff. Or
I do to book train. Yeah.
So it sounds like there was a Parisian who was burned by the games in the summer, so with an awful lot of travel.
Nico, I just want to bring you in on one last point, and I don't disagree with you on all of us needing to think about our impact on the planet. This is a good news story about embedded financial services, right? A lot of the stories we've had in the past sort of year or so about embedded financial services have kind of been bad news stories, particularly the collapse of Synapse, and also, a few American firms getting a slap on the wrist from the regulators or big fines from the regulators. But this is a much more positive story. I mean, and to the point, the other two were making and you were making. Surely this is what embedded finance is all about, is enabling finance to just become part of other journeys. What did you all think of this at Swan? Did you all think, hey, this is a good news story?
Of course, this is a good news story, and I totally agree with you. So there has been, not only the last year, but if you look at the 3 to 4 last years, we've been some embedded finance platforms having some troubles. Because our business is hard. Actually, we're doing the same stuff than Revolut or Conto or Monzo, this kind of company. We offer the same kind of service. The only difference is we don't have a direct relationship with the end customer, which means that we must rely on our partners to know our end client, and this is difficult. But that's not because some of the platforms had some trouble that embedded finance doesn't work. Actually, if you look, there is so many use cases there, and there are some very successful platforms, but people don't talk about it because failure is more exciting. If you look at Stripe, they've issued tens of millions of cards with embedded finance. Adyen is doing the same, and we are doing the same. And it's not only about banking as a service platform. What TravelPerk is doing with Yokoi is a great example of embedded finance, and Checkout is doing the same with other types of embedded finance.
Fantastic. Well, that's a great link to our next story, which is about Checkout.com. So thank you, Nico. So Checkout.com is setting the stage for return to profitability. Checkout has announced a profitable end to 2024 and a 45% year-on-year net revenue growth in its core business. Also in 2024, Checkout.com added more than 300 global enterprises to its network, and more than 40 merchants now process over $1 billion annually on the Checkout network. On Black Friday alone, 67 merchants processed more than $10 million in a single day, a 63% increase from 2023. It also posted 80% growth in the US, as well as some growth in every operational region. It was the first global payments provider to have a direct integration with Visa and MasterCard in Japan. And looking ahead to 2025, a New Year letter from the chief executive, Guillaume Poussaz, revealed that the company is targeting 30% growth in net revenue, a full year of company profitability, and a 15% increase in company headcount in 2025. So huge achievements and ambition from Checkout, and we're very privileged to be joined by Rory O'Neill, CMO of Checkout.com, to tell us more about this. Sounds like really, really good news. How are you feeling at Checkout.com about this? Is everyone feeling positive, optimistic? Tell us a little bit about the sort of sense of momentum you have within the firm.
Well, we're fundamentally positive at Checkout as one of our core operating principles, actually in terms of how we look at things. But look, we're driven by actually keeping our merchants ahead of the markets that they're in. And Checkout's a simple business that puts every single thing it does into making sure that digital payments work for merchants that are competing in the digital economy. So all our machine learning, all our artificial intelligence, all our combating for fraud, risk management, etc., is there to chase every basis point and help our customers delight their consumers or customers at the point of sale. So we're thrilled to keep serving those customers. We're thrilled with the results, and we look forward to continuing to grow globally and adding capabilities to the network.
Why this goal of a sort of full year profitability? I mean, that sounds like a stupid question. Obviously, profitability is good, but why the goal specifically on getting to a full year of profitability rather than just getting to sort of ongoing profitability?
Yeah, I think it's a key trend, as I think the team has said earlier in the call. This isn't 2021 anymore. I think that long-term sustainable profitability is what everyone is looking for. Most importantly, our merchants are looking for that. They're looking for partners that they can trust, in the digital economy, and the likes of Alibaba through Adidas or Delivery Hero through Dyson. They want stability and payment partners that can process everywhere around the world for them. So we're making sure that, we're going to have a sustained growth rate of 30% as we go through 2025. We want that to be sustained into multi-years. And we know that that gives us the advantage to reinvest that profitability in growing the company. We're adding 15% to our headcount in 2025, making sure we've got more professionals that are solving great payment problems for our merchants. And, we'll be able to take advantage of the focus in digital and combining that with great technology to deliver better service to merchants.
Nico and Vivek, maybe each in turn, are you and your companies sort of feeling the same determination to get to sort of profitability and to stay profitable and maybe sometimes sacrifice growth opportunities in order to maintain profitability? I mean, Nico, are you in a sort of similar place to checkout.com?
So yes and no. Yes, of course, because the whole industry has changed. Exactly like Rory said, we are not in 2021 anymore. So, and even us at Swan, when we issue a card with the logo of one of our partners, we want this to be profitable. When we create an account for one of our partners, we want this to be profitable, and we try to have better gross margin. We really try to look at our numbers very, very closely. At the same time, we still have investors that believe that what we are currently building needs a lot of capital, needs a lot of cash, and we're still not profitable, and I wouldn't say proud of it. That's not what I would say, but it's time to grow at least in 2025 for Swan. But we look at profitability maybe for 26 or 27, so it won't be long.
Vivek, how about Multiply?
Yeah, we're on the cusp of profitability, but we've also been balancing getting to profitability with growth. We enjoyed a lot of growth last year, and we've got a huge kind of list of features that we're excited to build out on the back of all the advancements on the generative AI side. So we feel keeping one eye on getting to profitability brings a certain amount of discipline to the way we're thinking, and it also, as a founder, alleviates a huge amount of pressure around constantly going out to fundraise, and means that you're in a lot more in control around timeframes and triggers around that kind of thing. If we wanted to, I think, in terms of optionality, if we were to want to, go out, tap capital markets, tap the VC space, to accelerate our growth, I think, we could do that, but I think you're in a stronger position once you are at profitability. Do I feel there's a lot of pressure out there for it? I think it just allows firms who can get to profitability to have more control around their destiny and more optionality. So it's a good place to be if you can get there, is probably the way I'd look at it. And that's after a number of years of not being profitable. So it just feels a lot better, and it's a nice dynamic for the team as a whole.
Rory, I'd love to come back to you on the international expansion of checkout.com. I think it's a really, really interesting part of what you're doing, because in many industries, expanding into more countries sort of just means more customers. But in payments, you start to get a little bit of a network effect. I mean, how important is it to your customers that you're in multiple countries, and how much does international expansion really sort of fuel your growth?
Yeah, it really does. I mean, I think it really is the network effect and the power of the network. All payments are inherently local. And you have to be able to understand exactly the local processing, the local payment methods, local services, the local feet on the ground, in order to make sure that, effectively money is moved from one place to another, ultimately very, very locally. So, we've invested recently in getting into Japan, very proud of our integration with MasterCard and Visa in Japan, working with some of the largest companies in the world to process in Japan. We're about to go into Canada. We're, announced that we're going into Brazil. So all of those regions and all of those countries, it's complex to get into. And actually what it means is that for our customers and our merchants, once they have one connection to checkout, they get the ability to process in all of the markets that we can then reach via the network. And that network effect compounds when you add the different payment methods that are needed to be used in each of those different markets. So really, this is about making sure that merchants can remove complexity from global payment processing. And we're taking on the complexity of making sure that, when we process payments locally, it's to the right economies of scale, it's the right efficiency, and it's the right simplicity for all those merchants to trade everywhere they need to around the world.
One quick question for the payments geeks listening to the podcast, and there's a fair few, or rather the non-payments geeks perhaps, because the geeks will know the answer to this. Why is something like a direct integration with Visa and MasterCard so helpful, like you've got in Japan? What does that enable you to do sort of cheaper, faster, or better than you could without that?
Yeah, I think there's a couple of things. So one is the actual payment performance itself. So when you go direct, you're able, in our full stack infrastructure that's built around that direct integration, all the complexities of payment processing, the data packets you need to send, the challenges around what needs to be sent with various issuers, all that kind of performance of that transaction is all kind of managed in one place, and then you can roll AI and machine learning on top of it to make sure that actually payments are just more successful. And that's a combination of products, that's a combination of services that sit around it. There's also just better economics. When you're processing between two local entities, the fees are much more advantageous than they are if you're processing cross-border or internationally. And the investments to get into those markets to help businesses trade local entity to entity is really what drives the economics.
Fantastic. Thank you. Well, many, many congratulations again to you, Rory, and to all of your colleagues at checkout.com for that fantastic achievement over the past sort of 12 months or so, getting to profitability and winning so many customers and processing just mind-boggling amounts of money. So congratulations to you all. Okay, we'll now have a very quick touch on one more news story that we don't have time to cover in full, which is that Australia has told its BNPL providers to apply for credit licenses. So Australia is bringing buy now, pay later providers under formal financial regulations, requiring them to apply for credit licenses ahead of new laws taking effect in June. Previously, BNPL products from Afterpay, Klarna, Zip and others operated outside the existing credit laws. But the Australian government has now amended the National Consumer Credit Act to introduce a new low-cost credit category. The Australian Securities and Investments Commission, ASIC, is urging buy now, pay later firms to apply early as the licensing process could take time. Buy now, pay later use is soaring down under. 40% of Australians used buy now, pay later in the first half of last year. I'm not surprised we're seeing this from the Australians. BNPL has grown very fast in Australia. It's one of the biggest markets for BNPL. BNPL is credit, and credit should be regulated. Credit can be great. It can also be a catastrophe for people if used badly. So bringing buy now, pay later into the regulation is something that should have been done some years ago. It's something that many leading firms have been asking for. So it's great to see the Australian regulators doing that. And I think we will see many other regulators following suit around the world because it kind of, buy now, pay later kind of snuck through a bit of a loophole. And finally, something a bit different. So we're going to ask everyone to shout out their favorite fintech or banking app's user experience, because this week marks the release of our 2025 11FS Pulse Report, where we highlight the fintechs creating the best user experiences over the past year and look ahead to the trends that we think will shape this year. In the report, we highlight 9 Pulse stars, which are the best user journeys from the past year, and we recognise those that have embraced advanced technologies to provide enhanced customer experiences. Some of the brands featured this year include Up, Public.com, Monzo, and Nubank. So to mark this, I want to give our guests the opportunity to do some of their own shout-outs too. So this could be something as small as a single user journey to an entire app, an entire business-to-business customer experience. So some suggestions we've had from you, our listeners in our community, are Revolut's new in-app calls feature that confirms who's calling you, Monzo's gambling block, and the point-of-sale device from Capitec that went viral on LinkedIn. So I'm going to come to each of you and ask you for your favourite. So Rory, perhaps we can start with you. What fintech or financial services app has really impressed you with its user experience over the past year?
So thank you, Benjamin. Look, I'm going to name one of our partners, actually. We work with a company here in the UK called Zilch. And actually, I'm really impressed with the team there and their purpose in life for making sure that hidden fees on credit cards are actually removed. But I think they've got a really, really neat app, really neat user experience. And I think I'm aligned with their mission in life and purpose, which makes the experience even better, I think.
Love it. Vivek, how about you?
Yeah, I'm gonna give a shout out to one that we started using probably about 2 or 3 months ago within our family, which is NatWest Rooster. It's made providing pocket money to the kids, not scrambling around looking for loose change, that kind of thing. But I think also the kind of app experiences for my 2 kids has been really good. Tracking their chores. And also being able to split whatever's coming in into different pots. So I've been pretty impressed with what they've built on that side.
Very nice. And how about you, Nicolas?
So first, embedded finance is always to enhance end user experience. So I don't want to put too much pressure on me. I don't want to name one of my partner because I don't want the other ones not to be happy about that. So I will talk about another one. So I'm quite impressed by what Conto is doing in France. So it's a classic neobank like Monzo you can have, but really the work that these guys are doing is amazing. So, in a way, we are competitors, but shout out to them. They're doing a great job.
And for me, I really like the firms that are trying to tackle some of the really big and complex challenges. Things like firms helping people with understanding sort of long-term financial planning. So some of the firms that I think are doing a really great job are firms like sort of Wealthfront and even Robinhood out in the States that are really trying to help people think about their long-term money and designing some really good user experiences. But one of my favorites is actually BBVA in Spain that has a really great section in its app that helps people think about their financial well-being. It helps them think about their financial needs, the financial needs of their family. It helps them think about things like insurance, pensions, short-term money, long-term money, and really helps to explain the challenges and decisions facing people in simple terms. And I also like it because sometimes you get the sense that only teams that work at fintechs can design good user experiences, but actually there's plenty of really smart people and great teams at established financial services firms also designing great experiences. So shout out to the team at BBVA and indeed many other firms designing some fabulous better experiences for their customers. Okay, well, that wraps up this week's Fintech Insider News. Thank you so much to my 3 guests today. You've been brilliant. Where can people find out a little bit more about you and your companies? Rory, where can people find out a little bit more about you and checkout.com?
Very simply, checkout.com.
Vivek, how about you and Multiply?
I'm gonna use similar trick. So multiply.ai is our website, or just feel free to get in touch with me on X, at followVM, or on LinkedIn.
And Nico, how can people find out more about you and about Swan?
So Swan, please don't use swan.com because it's a crypto company in the US. So we're swan.io. Please, you can go on our website, and I'll answer to any message you can send on LinkedIn to me. So I try to.
And as for me, Benjamin Ensor, you can find me on LinkedIn. Well, thank you all so much for listening to today's Fintech Insider. If you've liked what you heard, please do get in touch. Tell us what you'd like to hear about in future episodes. Please do follow us on your favorite podcast platform of choice. If you want to join the conversation, find us on social media or just search for 11FS or Fintech Insider or email us at podcasts@11fs.com. Thank you all again and goodbye.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.